Very good afternoon, team. Today we will discuss the interview questions about DORA. Today I will try to convey you what is DORA, what is the purpose of DORA, with all the questions mentioned here. These are the questions. Second question is, if you already have multiple frameworks, then why you are introducing DORA? Third question would be, does DORA mandatory for all the companies? Fourth question is categorized in A, B, C, D, E. A should be if a financial company based out in EU, does DORA applies to it or not? Second question would be if a financial company based out of UE but consumes EU data and not registered from EU body, does DORA applies to it or not? Third would be if a financial company have office branch in EU, does DORA applies or not? And D would be if a financial company base location is European Union but operate outside EU, does DORA applies to it or not? E should be after knowing all conditions, could you please tell me whether Amazon France is applicable for DORA? So this is a question test for you after knowing all these sections. Question number five. Overall, could you please conclude the criteria to fulfill the DORA? Question number six. How many pillars available in DORA? Seventh would be if I am ISO certified, can I handle the DORA law or how comfortably I would handle the DORA? So these are the questions. So today's class, I tried to convey you the concept of DORA because DORA is very confusing whether it's applicable or not, or up to what level of content it is applicable. So I try to convey you with the help of these questions. So let's begin the answer. What is DORA and what is the purpose of DORA? So DORA generally stands for Digital Operation Operational Resilience Act. So it is a EU law introduced by the European Union to make sure whether banks and other financial institutions can continue providing their services even they face cyber attacks, even they face system failures, outages, or third-party vendor issues, or ICT communication and disruptions. In simple words, I would say that DORA is a rule that tells financial organization how to prepare it, how to respond it, and recover from technology-related incidents. What is the purpose of it? The purpose of DORA is to ensure that financial organizations are digitally resilient. That means they should be able to prevent technology failures as much as possible, detect incidents quickly, respond effectively, recover quickly services, and continue serving customers during interruptions. Second question is, if EU already have multiple framework, then why are we introducing DORA? Before DORA, there were multiple different laws, standards, and guidelines related to the cyber securities and the IT risk. Example, ISO talks about the information security management. GDPR talks about how to protect your personal data, and NIS is about the cyber security for essential and entities. EBA talks about IT and security for banks. Uh, EIOPA talks about IT and security for insurance companies. ESMA talks about for investment firms. But the problem was that each framework focuses on different area and not financial institution had to follow the same ICT resilience requirements. If I can say that below are the problems before DORA, right? Different rule for different sectors. They focuses on cyber security, not operational resilience. So earlier frameworks were mostly focusing on cyber securities, but DORA is focusing on the resiliency part. Third party ICT risk were increasing. That's why DORA is more important. Lack of consistency across EU, different EU countries implements different rules, and DORA creates one common regulatory framework for digital operational resilience across EU financial sectors. Question number three, does DORA mandatory for all companies? No, DORA is not mandatory for all companies. It is mandatory only for special or specific organizations in the financial sector that operate in the European Union. So this is the criteria for it. Financial entities like bank, insurance, payment gateways, investment firms, stock exchanges, etc., must be licensed and regulated by the EU and provide ICT services to the financial entities. So this is the criteria to become a DORA eligibility. If a financial organization satisfy A, B, and C, means that financial organization is eligible for DORA. Question number 4A. This is a situational based. If a financial company is based in EU, does DORA applies or not? If a financial company is based in the European Union and belongs to one of the financial entities categorized by DORA, then DORA is applicable. So simple meaning is, the company should be financial, operated in the EU, that means DORA is eligible for it. Question number B. If a financial company based out of EU but consumes EU data and not registered in EU body, does DORA applies to it? So simple answer is, if organization consuming EU data and not taking any uh, okay. If company based out of EU and consumes EU data but not registered in EU, see, if not registered in EU, that means it does not make DORA applicable. But DORA is not based on data where it comes from, right? So it is based on whether the organization is EU regulatory financial entity or not. So let's understand with a example. See, this is a bank. Okay, this bank is located in India, for example. Let me just make it minimize it. Okay. A bank is located in India, right? It has customers in India, obviously, and it processes some data that originated from the EU, like NRI accounts. Okay, it is not licensed or regulated by the EU regulatory finance. Why? Because it is based in India, and they are not operating in the EU. That's why they didn't take the license. So in this case, if you has checked, it has no EU branch or EU regulated subsidiary. So DORA generally do not apply to it. Right? The fact that it handles the EU data alone is not enough to bring the DORA compliance. Then when DORA would apply here? The DORA apply if the same Indian bank has a branch in Germany and it becomes taken license by the EU finance regulator or operates as an EU regulated financial entity. In this case, DORA is apply here. Okay, what is question number C? If a financial company have operated office branch in EU, does DORA applicable or not? See, this question is very tricky. The question is saying that you have operating office. Operating means if they are operating financial activities from EU, then DORA applies it. If they have sales and marketing offices, then DORA doesn't apply it. Let's try to understand with an example. See, this is a situation number one. The EU branches regulated financial entities. DORA apply. Example, a bank headquarter in the US open a licensed branch in Germany. An insurance company from India opens a regulated branch in France. An investment firm from the UK has an authorized branch in the Netherlands. Since these branches are regulated by the EU financial regulator, they must comply with DORA for their ICT systems and operations. Why? Because number one criteria is their financials, right? Second is they all are registered. See, this is registered in the Germany, this is registered in the France, and this is authorized branch in the Germany, right? So they all are registered by the EU financial regulator. That is why they applies DORA. Second situation, which is very confusing. So listen carefully. The EU office is only an backend office, IT supports office, marketing office, or sales office. In this case, DORA does not apply to it. Why? Because back office IT support and all right do not satisfy the financial. Okay, let's try to explain with an example. An Indian financial company open an IT development center in Poland. A US bank, a US bank has a technology office in Spain. A financial company has an HR or finance operations office in Ireland. If that office is not regulated, finance entities simply having employees or an office in the EU does not make the company subjected to DORA. And situation number three is if the EU branch provides regulated services, then straightforward DORA is applied. The branch serves EU customers. The branch is licensed by the EU regulators. The branch performs regulated banking, insurance, investment, or payment activities. In this case, they are straightforward applicable for the DORA. So, after knowing all these questions, guys, right? All these questions we discussed, right? Could you please tell that after knowing all conditions, could you please tell does Amazon France is applicable for DORA or not? Okay, let's try to discuss this answer. No, DORA is not apply because the first condition is financial. The company should be financial, but Amazon is not a financial company. Amazon is an e-commerce and retail company and not regulated, financial entity. That's why DORA is not applied to it. So DORA applies for banks. DORA applies for insurance, investment firms, payment institutions, electronic money institutions, and crypto assets service providers. So for these institutes, DORA is applicable. Otherwise, DORA will not. Okay. Now, here the question number. Next question. How many pillars in DORA? So DORA generally have the five pillars. All these five pillars work together to ensure that financial institutions can prevent, detect, respond, recover, and learn from ICT's information and communication technology disruptions such as cyber attacks, system failures, and third-party outages. Okay, pillar number one talks about risk management. As I said, it has five pillars. So it starts with the ICT risk management. What is ICT? ICT is information and communication technology. Okay. The purpose of ICT risk management is prevent cyber incidents before they happen, right? Uh, so DORA expects every financial organization to have a proper ICT risk management framework approved by the senior management. This includes identifying a risk, protecting systems, detecting threats, responding to incidents, recovering from disruption, and continuous improving. But the question arises here, what comes under pillar number one, right? Under risk management, right? What are the sub pillars? So it starts with the governance part, right? Pillar number one is responsible for board and senior management responsibilities, policies, roles and responsibilities, risk appetite. Risk management is also responsible for asset management. See, what I'm actually, trying to say here, ICT risk management means the complete organization, how they are managing the complete risk with respect to governance, how they are managing complete risk with respect to assets, how they are managing risk with respect to access management, with respect to this one vulnerability management, with respect to network security, with respect to endpoint securities, with respect to logging monitoring, backups and recovery, business continuity, change management, etc. So this question talks about how you are managing the complete risk management. So under asset management, what is a hardware inventory, right? How software inventory works. These are the things. How are you managing the risk? Under access management, right? How user provisioning, deprovisioning, multi-factor authentication, password policies, PAM, RBAC works here. Vulnerabilities management, how vulnerabilities scanning, how patch management are happening, and how secure configurations are happening. Under security, under a network security, how firewalls are working, how IDS and IPS, how network segmentation and how secure remote access is. Endpoint security, how antivirus, EDR, XDR, and device and encryptions are happening here. Under logging and monitoring, same log monitoring and security alerts, backup and recovery, It comes under how backups, whether backup policies are in table or not, how restoring testing, how RPO and RTO works here. So these are the things under ICT risk management. So overall, if I can say that how organization is managing the complete risk management life cycle. Second pillar is about the ICT incident reporting, means under critical hacking or ransomware or any disaster, a global disaster, how organization is reacting on incident reportings. So report cyber incidents quickly to regulators, right? How organization is reacting on ransomwares, data breaches, system outages, and cloud failures, major cyber securities, how they detect it, how they are classifying it. All these things uh, comes under the reporting part, right? Examples. Hackers and encrypts a bank server. The bank should detect the attack, right? The bank should stop the spreading of the incidents, informing management, notifying the regulator if it's a major ICT incident, restoring services and perform lesson learned. So this is the example, right? This is a good example how you treat after ICT in incident reportings. Pillar number three talks about operational resilience testing. Regularly test whether security controls actually works or not. So organizations should perform risk-based resilience uh, testing, which may includes vulnerability assessments, penetrating testing, red team exercise, and penetrating testing under TLPT for certain entities, disaster recovery testings, backup restoring testing, and BCP exercises. Example, the organization restores backup data to confirm whether data can be recovered. Recovery is within the RTO, recovery within the RPO. If recovery fails, the controls needs improvements. Next pillar, pillar number four is ICT third-party risk management. So the purpose of third-party risk management is to managing the vendors and the services and the service providers. So financial organizations relies on the cloud providers, SaaS providers, and data centers for payment processors, IT support vendors. So DORA requires organization to perform vendors due diligences, assess ICT risk, include the security requirements in contracts and continuous monitoring vendors and all these stuffs. Example, uh, a bank uses AWS. Before onboarding AWS, the bank should perform security assessments, review certifications, include security clauses in the contract, monitoring performances, and define how to exit if required. Last pillar is the information sharing. This is by human pillar where we are sharing cyber threat intelligence to our competitors. Think if your neighbor knows thieves are active nearby, you should benefit from that information. So this is the purpose of the pillar number five. So organizations are encouraged to share information such as malware indicators, phishing campaigns, attack techniques, and attacks of compromise and threat intelligence. So, sharing helps other financial institutions strengthen their defenses. Example, if one bank detects a new phishing campaign targeting customers, sharing that information enable other banks to block similar attacks because they are affected. So, this is the purpose of information sharing. Means they are sharing the hackers' details to prevent your organization in advance. Next question is very important. If you are ISO certified, how can you handle the DORA or how comfortably you can manage the DORA? So if you are experienced in ISO 27001, you already have a strong foundation of DORA. So ISO 27001 knowledge is alone 100% not enough for Audit of DORA, because DORA is a regulation law with additional requirements specifically to the financial sectors. ISO 27001 backgrounds puts you in a good position to learn DORA relatively. So approximately, I would say 70 to 80% of DORA concept will align with ISO and general information security practices. The remaining 20 to 30% consist of DORA related to specifically regulatory requirements. So DORA helps you to prepare the risk assessments, information security policies, asset managements, access controls, encryptions, logging and monitoring, backups, business continuity, incident responses, supplier security, internal audits, management review, because these also are part of the ISO 27001. So these areas will already familiar uh, if you have worked with ISO 01. So, what are the areas you feel different from ISO, right? Number one is a regulatory obligation. The regulators are different, right? In DORA, you are responsible towards EU regulators, so your responsible regulators would be changed. Second is reporting part. In ISO, there is no specific timeline bound with the ISO, but in incident reportings, right, DORA has some limitations. Number three is operational resilience testing, right? ISO is focusing on testing part also, but DORA is more targeting uh, TLPT for certain entities and the risk-based testings. For third-party risk management, ISO is targeting third-party risk management, but not in much deep manner. If I would say, DORA is much more focusing or in very detailed manner on the TPRM part also. So DORA has detailed requirements from ICT vendor inventories, contract clauses, exit strategies, ongoing monitoring and oversight of critical ICT providers, and financial sector focus. DORA is specifically focused on the financial sectors. So, this is all about the DORA. If you need further support, right, you can contact me, or if you need the GRC practical trainings with RSA Archer, okay. If you want to learn ISO, if you want to learn TPRM, if you want to learn SOC 2, or if you want to learn data privacy, PCI DSS, or interview preparations with tips with unlimited connects with me one on one, you may do the comments, or you can contact me on grcdecode@gmail.com, or you can connect me also on 9015997199, right? Uh, we are providing very detailed training one on one with RSA Archer to our students. Many students are already placed in good organization, and this is a lifetime connect, so take benefit. The fees is very normal. So I hope guys these DORA sessions helps you a lot. If you have any specific queries, let me know. Thank you so much. Have a nice day.